Hello and welcome to the trade setup. In this video we are looking at DELL. It is time for another update, and today we will be discussing about the relevant levels to watch out for in a possible continuation to the upside and how likely they are, but we will focus mainly on the larger time frame where we have a possibly quite nice setup, especially now that we formed this additional high since the previous video where we were still tracking continuation to the upside in certain cases. But before we get there, I would like to go quickly through the larger time frame where basically we are tracking on this chart a 1-2-1-2 setup where we have possibly bottomed even within the secondary 1-2. Now, I do have to say, this comes with the risk of forming a larger ABC pattern, in which case we may need to be prepared for even more significant retracements, but for now we can still track the continuation to the upside, especially as long as we hold the area of support for such a wave 2 correction between the $94 all the way down to the $47 level. Now we are tracking a possible reset within this wave 2 in this yellow interpretation where we have basically an ABC pattern to the downside where we have topped in the wave B just now and we are heading in the wave C, or into the wave C, and in that case we can even look for an ideal target. Now I do want to mention while we do this, this is not my preferred interpretation. I would actually like to still see further extensions to the upside once we have completed here this internal correction, but before that we are looking here for an ideal target for the wave C at the 100% extension of the wave A, which is around the $62 level, very much in line with the 61.8% retracement. Now in the larger time frame, this is a possible interpretation where we have a wave 1 complete here and we are in a wave 2, or we have completed the wave 2 already. But it is also possible for me to track still even extensions within this wave 1, where I may consider that okay, we are within a leading diagonal to the upside within a larger wave 1, or could still be also the scenario of the wave C unfolding. But in that case, I could very well argue that this is a 1-2, this is a third wave up, we have here a fourth wave down, and then a fifth wave would be unfolding right now. And honestly, I probably even prefer this interpretation, but even within this scenario, I am still looking already for this trend to continue directly higher without the retracement in the wave C of yellow. That is not my preferred interpretation. And we will leave here on the chart this idea for a wave 2 because technically we need to watch out for this level of support for a more clear invalidation of the uptrend that is forming. But for me, it is preferred that we are forming something like an ABC structure within a fifth wave of this larger wave 1 to the upside. Now, in the short time frame, we have been tracking this idea of a wave 1 for quite a while, and we have been tracking it as possibly complete here within a leading diagonal. Now, again, if this is really part of the fifth wave to the upside, this would be a wave A up, but in the end, it would have an identical area of support with what we have here for a wave 2 between the $118 level all the way down to the 78.6% retracement at the $80.8 level. Now we can see some relevant areas of support, structural support as well here, the 38.2% retracement. We can look at the larger time frame as well. We see some here at the $114 level. Also, the most significant probably is here between the $87 level to the $89 level. This is probably the most significant in terms of structural support, but we do have also the Fibonacci retracements that we are tracking here, that are very much in play. And then we will be tracking very closely this idea of an ABC structure that could be unfolding within this wave C to determine with as much of a clarity, as much of certainty as we can have this correction. Now, since we managed to extend higher within this wave 1, I am pleased to say that I can actually even track a possible impulse to have formed within this movement to the upside. We do have the possibility to track a 5-wave move within each of these waves 1, 2, or not 1, 3, and 5. We do have the possibility to track a 5-wave pattern, and in that case, we may even have a little bit more confidence in actually having a wave 1 top here. Now, that does come with some warning signs that, yeah, indeed, we should be prepared for a more significant retracement. And if we look, we do see the divergences needed for the pattern that we are tracking, and we are very much prepared for a more significant correction within this wave too. But I do want to caution you that even if we expect such a pattern to develop, at the moment we can actually still track even an active uptrend within probably a different count internally here, where yeah, this could actually be something like a 1-2 setup. Not my preferred interpretation. I do actually look forward for the larger correction here in the wave 2, but I suppose we could add here an internal possible 1-2, where in that case I would be watching out for support between the $147 level all the way down to the $127 level. But as you may notice as well, within this push to the downside, we are already headed towards the 78.6% retracement. And not only that, but it does seem to be a pretty quick regression here. We did push quite quickly in this downtrend, and it only seems to get stronger at this point. And I may even argue that we are building a larger 5-wave move down, yeah, within a wave A, possibly to the downside. Now, again, it is possible to track some levels of support still ahead of us, but it is not necessarily too much of a likely interpretation, at least not to work out directly into a third wave to the upside or even any additional highs within this area. Yeah, that is not the preferred interpretation for me at the moment. Now, if we manage to break certain levels of resistance, for example, if we actually look here at the levels between the $144.9 all the way up to the $160 level, yeah, if we manage to break here above the 78.6% retracement, the probabilities may shift, then especially if we manage to form an initial 5-wave move to the upside. But at this point, I am pretty much focused on lower prices, and for now, we need to still wait to complete the initial move down, a correction, and then we can look for an ideal target for a bottom within this wave too. But from a larger time frame perspective, keep in mind, sometimes these corrections just end quite early, and we may get, as we did on the Elliott and company chart, get to the 38.2% retracement, where, again, structural support as well, and already start the next wave to the upside, which, yeah, could be a wave C, which would complete a larger structure overall, and after that, yeah, we will need to be prepared for a more significant retracement. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.